Hello, folks. Good morning, good afternoon, good evening, wherever you are. This is Doc Severson with ReadySetCrypto Trade School, today for Friday, the 17th of January. So today we have a couple of questions that came in this morning, which we are going to address through Trade School. So let's get started here. We'll throw me down to the lower left-hand corner. Hello, down here. And so we'll get going with today's presentation, which is based on questions. So a couple of them that came in today. And by the way, this is always something that's, you can feed me questions either way that you guys want to through email at support@ReadySetCrypto, or you can just send them to me in the Discord area and say, hey, Doc, next time we do a trade school, could you cover this topic for me, please? Something that came up today was getting over the doubt and taking the trades. So, I think it's something that everybody goes through, is getting to the point where, and you'll see why this happens, is getting to the point of where you become afraid to trade. You become afraid to pull the trigger because you've been slapped around so many times. You don't want the next time to be slapped, and you literally get to the point where you can't take another loss in your account. And then we'll finish up today by finding good exits. So there was a question about how do you find good exits for a position. So without further ado, off we go. So the first problem that we have to solve is pulling the trigger and dealing with doubt. By the way, if anybody is live here today, most of you watching this will be watching this through some type of replay going forward in the future. That could be today or it could be a year from now. Who knows? But if you have any questions on today's material, you can always just shoot me an email or reach me through the Discord site. If you are live today, let me know that everything is coming through and working okay, that I'm not just sitting here talking to myself in an echo chamber. That would be appreciated. Okay, so how do we solve this problem, pulling the trigger and dealing with doubt? I think the first thing that we have to illustrate is that this is very normal. This happens to literally everybody. Literally everybody. So I'm going to change something around here, and there we go. Okay, so everybody deals with this problem. This is not unique to you nor anybody else. Why does this happen, and how do we deal with it? If you haven't already done so, I would suggest going through the Trader's Edge Masterclass, which is a class that I posted last month and is up in the Omnia area right now. So if you're an Omnia subscriber, then you have access to this class today. So check it out. And it's a masterclass format, which means that not only do you get a video, you also get a downloadable PDF file so you can read these things. And sometimes the information is going to be very different on the video versus what you'll see in the PDF. And I do that for a very specific reason, because some material just works better in a written format and some material works better in a video format. So this whole problem was defined by stage 3 of the trader progression, which is the cynical skepticism stage. So if you haven't heard me go through the trader progression before, check it out today, because you'll have a lot of aha moments, I would say. Every time you light up a trade, you get burned. Okay, we've all been there before. If you haven't been there yet, you will get to this point where it's all of a sudden you touch the stove and you get burned every time. And after a while, you don't want to touch the stove anymore. What this creates is a corrosive environment where you become fearful of entering the next setup because you're afraid it's going to give you the same result. I mean, we all understand this is the way we've lived our life. The human brain tries to protect you from pain. You seek pleasure, avoid pain. Seek pleasure, avoid pain. This is the way the brain operates. So avoiding pain is something that makes sense. If you get burned every time you take a trade, you're going to feel a little bit hesitant about taking the next one. So one of two things will happen. If you pass on the trade, then it's very likely, this is just the way things happen, guys. If you pass on the trade, it's very likely to play out as you expected. And that's just going to make you even more frustrated. You're going to say, I'm going to pass on this one. I'm going to see how this one would have worked out. We've all done that, right? I'm just going to pass on this one. Doesn't feel just perfectly right. I'm going to pass on it. And of course, those are the ones that work out, aren't they? Now, why did you pass on it? It's probably because something didn't feel just right. And what you'll find is eventually that is part of the key towards success, is trading or taking the trades that few others will take. Means that you're going against the crowd. So that's actually a good thing. You need to tune your radar into when everybody else is leaning in the opposite direction. You need to go in the direction of that's opposite to the crowd. Or if you do take the trade for whatever reason, it'll be a loser. And this is just the way it works, right? So if you pass on the trade, then it works. If you actually take the trade because everything feels good enough, it's going to be a loser for you. And we've all been there before, and it's extremely frustrating. And so these outcomes repeat over and over again until you either quit or move to the squiggle trader phase of the progression. The squiggle trader phase. So let me go into this here. Now, I may have to get rid of my little face here, down here, so you can see what's going on. Okay, so trust me, I'm still here. You just hear my voice. So this is the trader progression that we talk about. You go from mystification. This is by Bo Yoder, by the way. You go from mystification to the hot pot stage. The hot pot stage, mystification basically is where you just don't know what you're doing. Everything is just you're clueless. You don't have any education. Whatever you've learned about the markets came from a TV commercial. And so when you get a little education, you start to study things, you get into the hot pot stage. And the hot pot stage is you study something, you study something, you study something, and then you touch the pot and you get burned. And this is because you're waiting too long to get in. And then eventually what happens is this happens so many times that you become very cynical about the market. And you can see these people in any chat room. You can see them when we do our YouTube live sessions, because these are the people saying, oh, the damn whales and market makers are evil creatures that are out there to steal your money, and all of these other ridiculous, outlandish claims. And basically, if you don't trust the other market participants, if you feel that everybody else is just out there to screw you, well, okay, that's partly it. That's partly it. They're not there. People on the other side of the ledger are not there to help you make money. So if that's something new to you, they're there in an open market. So everybody is there trying to get their own fair share. So nobody grows up. I mean, there's no social edicts in a fair and balanced market. It just doesn't exist. So you have to focus on what you can do to get your fair share. So maybe that's an education for some people that, collectively, if we all work together, we can all, create a more valuable thing. Well, that's not going to be a free and fair market then. You got to have both sides of the ledger to have a fair market. And some people say, well, if it weren't for the bears, everything would be going higher, which is absolutely untrue. You've got to have both sides of the ledger to have liquidity. And also, it's nice to have those short squeezes in place when they get wrong. Okay, so cynical skepticism, you see this in a lot of people, and it's quite obvious if you've already been through this stage before and you see it in other people. It's like, ooh, okay, all right, sorry that you're so full of hate, but this is just the way the market works. So cynical skepticism occurs when, quite frankly, you're waiting for everything to feel right. And you're not willing to go against the herd. And you will stay in this stage in perpetuity until you're able to break out of it. Now, usually what people do to break out of it is they say, I know what the problem is. It's my system, or it's that indicator. And all I need to do is to add one more indicator. And you can typically see the people that are trading like this. Hold on a second here. Let me mute Mr. Phone. You can usually see the people that are doing this because they will have a price chart up here and they will have study number 1, study number 2, study number 3, study number 4, study number 5. They will have literally just stacks and stacks of technical studies. And the price has got some little inch of real estate up in there and you can barely see what's going on. I can't wait for you guys to see my new book that I'm working on here. So I intend to get this thing finished by the end of the month and get it published by next month, but it's going to be the fractal energy trading book and it's really good stuff. And so this is one of the elements that we talk about is that, you know, so few people are able to go based on the price. In fact, what I would state is there's also a mean distribution between the amount of time somebody has spent trading. So if we look at this as the number of studies somebody attaches to their chart, and this is time over here. So experience, we'll just call this EXP, somebody's experience. The more experience they get initially, hey, you know, they find out about these new studies and they find out about other people doing things and they start to add more and more studies to their chart. And after a while, what they do is they get to the squiggle trader phase and they're just completely choked with these studies. They're paralyzed. Analysis paralysis. And what they start to do is once you find your one thing, which we'll get to in a minute, and once they start to find their expertise, they start to drop these and they start to clean up their charts. And so you will find is people with a lot of experience that are good at one or two things will actually have very clean, very crude, very rudimentary looking charts. And you say, well, how can you make a decision based on that? This is kind of the progression that people go through is they clog more and more and more on them. And then by the time they get to mastery, they're using very few because they can read between the lines by that point. Okay, so squiggle trader, this is where the majority of most people are. Most people are sitting in an area right up in here between cynical skepticism, being mad at the market, and then trying to do something about it by overanalyzing what they do. So that's part of the problem with being afraid to enter a position is your analysis paralysis. So this is where you continue adding more and more technical studies to your chart to help prevent against loss. So the majority of all traders never get beyond stages 3 and 4. So why does this happen? How can you get out of jail? It starts because your brain has not been trained to welcome risk. Think about this. And I've said this many times before, so if you haven't heard me talk about this before, this may be something new. But we come into this world in a protective bubble, and our parents do everything that they can to help us not get hurt. You know, except for those few fathers, you know, you come home with a bloody nose, get out there and give him one back. I think those days are over now. And it's much more of a protective bubble these days where, you know, like, let's not have the kid learn about any kind of pain. And so your brain has not been trained to welcome risk. So we come into this world and we spend the majority of our first 2-3 decades trying to learn how to protect ourselves. So you've been trained to avoid risk your entire life, and now you're just supposed to accept it by getting into a trade. And your brain is going crazy. It's like, wait a minute, what are you doing here? You're putting our precious money into this trade based on what? And so your first natural instinct is going to be to wait until everything feels good. So we compound this effect by looking to others for affirmation. Hey, what do you think about this trade? And tell me that you don't see this happening every single day in the Discord room. Even, you know, whether you see it in the YouTube live chat room. What do you guys think about this? What do you guys think about that? Hey, everybody, I'm about to do this. Tell me why I shouldn't do it. And that feels right, doesn't it? I mean, in every other aspect of our life, bringing up a problem in a group format is generally a constructive thing, isn't it? Isn't this crazy? But it can be one of the worst things that you can do unless you get the right people to give you feedback on it. And also if they know what they're talking about. And eventually what you'll find is you won't want to do that, because what you're going to do is you're going to inherit some confirmation bias. Unfortunately, this just makes us part of the herd, though. If you go out on Twitter and say, hey guys, what do you think about this trade? You're going to be part of the herd, because people are going to say, no, I wouldn't do that. Trend is your friend until the end. Those kind of things, right? So market's moving away to cause the greatest amount of pain to the largest cross section of traders. And if you haven't learned this yet, you will eventually. You will eventually, because you're going to have to look for ways to get edge against the crowd. That's the way you make money in this business. We also compound this effect with basic trading errors of not defining exits. Remember, rule number 1 of risk management, define the exits before you enter the trade. Rule number 2 of risk management is don't risk more than 2% of your account on any one trade. So we immediately violate these 2 rules right off the bat. We put way too much of our account into something, and we don't define an exit. And so we end up with this thing, right? We end up with this position. We don't know what to do with it. It's too big, and we're losing too much, and we can't accept the loss. Well, I don't want to just sell off right now because that would destroy my account. So I'm just going to hold on to it because it's just a paper loss right now. We've all been through that before. And that paper loss can be still an even worse paper loss 2 years later, as many people that bought into the altcoin boom found out. So everyone goes through the same thing. I mean, it's unbelievable. I wouldn't have, when I first started mentoring traders about 15 years ago, I never would have believed that everybody would have the same exact issues. It almost is like everybody's reading off the same script, and it's because of the same social conditioning that we get. So where traders differ is what they do to change things. So this is where everybody has to get into that stage 5 of, let me scroll back here. Let's go back to stage 5 of what that was, of the trader progression, which is the inwardly bound. Once you learn to be inwardly bound, to say, wait a minute, let's do something that makes it work for me and not for everybody else. So the natural response to the situation is to trade not to lose. Well, I'll stop losing if I add more indicators. And it just causes more losing trades. You have to flip the situation around by trading to win, right? Trading not to lose is like watching a team playing prevent defense once they get a lead. They're preventing the win. So how do you trade to win? How do you stop doing all this stuff? Here are some steps you can take to do this. And again, this is in the program. All of this stuff that I'm bringing up here is in the Trader's Edge Masterclass. Find your one thing. I've gone into this before. I've said this many, many times. And in fact, this is what made the biggest difference for me, period, was I was your typical, you can see these guys everywhere. They're the smartest guy in the room, and they know everything about every indicator, and, they can quote chapter and verse on anything that you name when it comes to trading, but they're not profitable. That was me. And it was frustrating as hell because I knew so much about trading. I knew about different studies and different strategies and way to do it. I could quote chapter and verse. Why wasn't I making any money? One of the very reasons, there were probably a number of reasons behind it, but the number one thing was I had become a jack of all trades and a master of none. You can enter a lot of different strategies, but learning how to exit is really the key. That's the big difference between a retail trader and a professional, is learning how to exit properly. You can't do that if you got too many things. So finding your one thing. So I came down to, I literally swept the desk off and I said, okay, I'm not going to do another trade until I determine what my one thing is going to be. Okay, so define your one thing. That's the one thing that you are fascinated by. It's got to give you what Brett Steenbarger calls the rage to master. It's what's going to keep you up all weekend working on something, working on some kind of strategy, doing back testing, whatever it takes to completely immerse yourself into it. You got to find your one thing. And I would suggest it's one strategy, and I would suggest it's only one asset in one time frame. You're going to narrow yourself down to the tip of a spear. And you're going to master that one thing. And this is, quite honestly, this is what I found the professionals did. The guys that were the true pros in Chicago at the Chicago Board Options Exchange would literally just sit there and do the same thing day after day after day. These are the professional market makers that would spend thousands of dollars of their own money just to lease a seat at the exchange so they could trade commission free and then become liquidity providers or market makers. And they would focus on just doing one thing again and again and again, without fail, without exception. That's what they did for a living. If it worked for them, why shouldn't I try doing the same thing? So that's what I had to determine, was what works for me, what fascinates me, what makes me want to keep working on it at night after a long day. Find your one thing. It's called Curley's Law. Google it. Number 2, determine what your trading edge is. What will you do to get on the side of the smart money and away from the herd? So if your edge is just following everybody else's trades in Twitter, guess what? You're part of the herd. You've got to do something. And in today's environment, this is really difficult, right? Think about how everything has been socialized. We have socialized product reviews, haven't we? We go into Amazon and we say, well, I want to look for something at least 4 to 5 stars. Based on what? Based on everybody else's opinion. And I'm not going to complain about it. I use it all the time. I think it's phenomenal. The ability to rate something after the fact based on somebody else's experience. Now, I do have to read between the lines, and some of the 1-star reviews are just people that hate life, right? Some of the 5-star reviews are people that own the company, right? These are sponsored reviews. And so you have to kind of pick between the lines to find out something. I'm sure there's this whole science behind this. But think about that. Can you imagine posting a trade and then getting, trade reviews based on, well, I think that's a 5-star trade. That is almost a guarantee to a losing trade, is to socialize your trading ideas. And so you have to, this is the one part of life, and this is what takes people a lot to understand, especially younger folks that have grown up with this sort of environment where we implicitly trust everything that everybody puts out there. Product reviews or, anything else like that. And now I'm saying, don't do that. And in fact, one of the things that you'll find as you get into this business more and more is that you honestly don't want to hear somebody else's opinion on something. Like people will do this to me in the Discord room. They'll post somebody's video and say, hey, Doc, could you watch this 35-minute long video and tell me what you think of this guy's opinion? No, I won't do it. I won't do it because I don't want to hear. Even if it's something new and fresh and unique, I don't want to get any kind of bias because I do what I do and I try to remain, independent as possible. And I'll listen to ideas, I'll listen to things like that, but I don't want to get poisoned because confirmation bias is the most insipid, it's the most insidious thing that's out in this business, is that you will automatically try to seek certainty. And if somebody else has a great idea, then all of a sudden you get confirmation bias, and your reticular activating system will ensure that that's all that you see. It's like when you decide, hey, man, I really like that new, red Acura car. And then all of a sudden, that's all you see. You see them everywhere. That's because your reticular activating system has been informed by your subconscious mind to go seek and find that thing. That's what a human brain can be so perceptive on specific selective things. And unfortunately, when it comes to trading, it can be very, very dangerous because you only see one thing and you know that you've got confirmation bias. When the market moves against you and you sit there and say, hey, wait a minute, that's not supposed to happen. The market can do whatever the hell it wants to do. And it's our job to trade along with it. We can't stand in front of the freight train and say, stop. I command you to stop. You're not supposed to do that. But that's what I hear from a lot of people is like, that's not supposed to happen. And so therefore they go back into the old cynical skepticism phase of like, well, it's got to be the whales or the market makers and these evil people that are doing it. They're screwing us. That's what they're doing. No, it's not that at all. So determine what your trading edge is. Get on the side of the smart money, which means independent analysis. Number 3, build a plan. Make a pact with yourself to follow it like your life depended on it. So many people build a plan, stick it up on the shelf and say, done. I'm done with that. Okay, check. Next. No, it's a living, breathing thing. It's a plan. It's to manage you. That's why it's there. It's not to manage the market. It's not really to manage the strategies. It's to manage you so that you don't go off the rails with the other things that we do, right? This is all the stuff that we do. We trade not to lose. We look for certainty. We like to trade in groups. This is human nature. And success in trading requires you to think differently and act differently than nearly every other human that's out there. Number 4, iterate like crazy. Once you find your one thing, once you've got your strategy and set up your rules for this, then get repetitions in there. Beat those balls at the driving range. It's the same thing. Iterate like crazy and learn something from every single trade. Identify what your root cause errors are. And this is something that will take you a little time. So one of the things, people will reach out to me in Discord and say, Doc, I can't make any money with this strategy. Wah! Right? I'm not going to make any money. Why? And my question back to them is that what's the root cause? What's the root cause behind you not making any money? Silence. I never hear another reply. People are looking for the silver bullet. They're looking for the easy answer. But you've got to dig. You've got to dig at this. You've got to let the numbers tell you where the mistakes are being made. Are your entries awful? Are you trading against the trend? Are you chasing after entries? Are you entering at exhaustion? What are you doing? You've got to take responsibility for your own actions through this. You've got to understand what it is that you're doing and what you're not doing. You've got to identify the root cause errors. I'm here to help. If you want me to look at any trade and say, what did I do wrong here? I'm telling you, there is a root cause behind every single losing trade. Now, sometimes you're going to step in front of a big news event. There's nothing you can do about that. But 99.9% of the time, that's not going to happen. There's a root cause error behind some loss that you're taking. And usually the root cause errors are people chasing after the trends. They're getting in too late. They're looking for certainty. They're waiting until things look too good. Then they take it and they wonder why they get clobbered. The important thing here is that your job at this point is not to make money, but instead to build a profitable system. Invest the time. Don't expect immediate results at this. You have to retrain your brain how to process risk. It's not going to happen immediately. Number 5, earn the right to increase position size based on performance. Right? Keep it small. Keep those positions below your radar so that you don't even care what happens to it. That's ideal. And so how you do that, either through paper accounts or you can trade extraordinarily small positions. That's the great thing about crypto, is that you can really trim the position size down to next to nothing. And that's really not the case with a lot of the index futures are really pretty big. And they can cause some very emotional responses if you get on the wrong side of them. That's a great thing with crypto. You can nail those position sizes down so it's next to nothing. And so you may argue with that. So, well, if it's next to nothing, I'm not going to make any money at that. That's not your job right now. Your job is not to make money. Your job is to build your system. Earn the right to increase position size based on performance. And what I always do, like if you take any class that I've taught, what I always tell you is to go through 3 phases of this. Phase number 1 is where you're taking this thing, from zero, and you're building your system. You're building your system of rules, and you're doing this all on paper or a sim account or a testnet account, whatever you want to call this. But this is phase 1. Phase 1 is you're building an edge. You got to prove it to yourself that you're building an edge. Phase 2 is where you're actually going to trade this with live capital, but it's going to be very, very small live capital. So you're going to start out from scratch on this. And what you're going to find is it's going to be a different experience, even if it's miniature size positions. It's going to be a different experience, and you're going to have difficulty creating the same results. But once you do create the same results, then you've proved it to yourself. Then you can start to trade larger position size. So this is where you can go to stage 3 and start to turn up the heat. But I would go through this 3-stage phase. So number 1 is, again, not to make any money. You're using paper or sim or testnet, whatever you want to call it. Number 2 is to go with extraordinarily small positions below your risk radar. You don't even care what happens to the trade. But you've got to be able to duplicate the performance that you did on paper. And it's not as easy as it sounds. And then stage 3 is where you say, all right, I've earned the right to trade live now. I've gone through probably by this point 100 repetitions of this to get to this point. And I can do these trades in my sleep, etc. Earn the right to increase position size based on performance. And then as we get into the habits of things, think about this. If you were to increase your performance by 1% a day, you'd be 37 times better, or 3,700% better at the end of the year, something like that. It's incredible compounding factor. So 1% a day, can you get 1% better every day? Not make 1% more every day. No, we're not saying that, but just to make a little tweak every day, make a discovery, make a little observation, understand another root cause, find one thing less to do that's causing the problem. Get 1% better every day. So all of these steps will help signal to your subconscious mind that these activities are not risky. So going back to step 1 here is that the way that we process risk is different, right? We have to learn to process risk for the first time in our lives. So you're just working through a problem and it doesn't endanger it, right? So the trade is just something that you're doing. And so you're signaling that to your brain like, hey, it's just me trading over here. Don't worry, you don't have to kick into dinosaur mode and try to protect me. So always begin by reducing the danger by starting with either paper trades or extremely small live positions. And I do recommend the 3-stage training intervals like that. Okay, any questions? Any questions before I go on here? So let me know if you're live. Shoot me a question on that and I'll circle back here. I want to get to the question number 2, and I've just got some simple answers here. This came in a Discord today. I would like to hear about finding good exits, when to get out and take profit or when to stay in when the market is going up. Okay, everybody runs through this, right? Because what you're going to do is you're never going to be satisfied with what you've got. Everybody has to go through this. Anyone can enter a position or strategy. This is only half the deal. What separates the pros from the beginners is the quality of the exit. And what you're going to do, the problem that we're going to run into is that it's too easy to look back on this. So if you got a market that's chopping around and all of a sudden takes off like that, maybe what you did was you got in here and you got out there, and you're saying, oh God, why did I do that? Why did I do that? I got out way too soon. Or if the price had done this instead, if it had come up here and then immediately collapsed back in the pattern, and all of a sudden you're looking at a losing position, you'd be like, oh, why didn't I just take profits here? So the problem is that you're never going to be happy as long as you have discretion, 100% discretion. If you're going to do this like an art, you'll never be happy. So my suggestion to you is to go through a mechanical strategy. Don't give yourself any room for discretion. Don't turn this into an art, make it a science, right? So your job when you learn is not to make money, but rather to learn how to block out your fears and follow the signals. Once you have enough data, and so this is where I talk about things like swing length. There is, and I'll watch this during the day with different markets, and I'll see a specific swing length. They'll call it an ASL, like an average swing length. Okay? When something is trending, how far back does it pull back? And what is the distance when it actually starts to swing higher? How far does that typically go? And that's important for me because it's like, I don't want to set a target that's out here, that's way above the price, because then I'll have to go through an inordinate pullback. And there's nothing worse than, giving back all these profits. I hate that. I would rather sell into strength than undergo this pullback, just hoping that it goes back from there. That's not the way that I trade. I try to sell into strength. And so understanding where the swing length is gives you an idea where your target should be. Okay? But you can also make this really simple on yourself. This is what the trend trading strategy is for. The trend trading strategy is based on Donchian channels, and it's got a very defined exit. Basically, the exit for this is, the idea here is that you're going to, and this is your classic, win 30% of the time, but be on board when it goes massively higher. So you're going to take very small losses as you get chopped out around here and take the breakout and then get hosed on your going back to the pattern. You have to be okay with that. You have to look at the bigger picture here that you're going to lose perhaps 60 to 70% of your trades, but all the losses are going to be really small. And then you're going to get your meat hooks into one of these massive ones, which is going to pay for dozens and dozens of trades. This is basically the turtle trader strategy. So this is the trend trading system, which is in that class. It's the trend trading class in our archive. So for people that are having trouble getting started, like I don't know where to set my exits, because there can be a lot of knowledge required for exits. If you're doing short-term trading, like, what I'll say is, like, short-term trading, go for a 10% gain. If you're just trading the spot, go for a 10% gain. Learn how to win before you have the confidence that you can absorb a pullback and stay into a longer trade. So trend trading is nice because it's a very mechanical system, and we have basically a strategy that was outlined by one of our members and built into there, and it's really nice. But you have to get over this whole notion of it's not going to be a high probability, high win percentage rate strategy, but it will have a good expectancy over time if you've got things that trend. If it's just going to be a choppy mess, it's going to be difficult. That means it's in a larger time frame, consolidation, and may not be ready to trend. Okay, let's see. I think that may be just about it. Okay, so exits can seem like an art when you start trading. And some with experience can work that, so some people will just get a sense and a feel, sometimes I'll actually do this like, well, this feels like a good place to sell into strength to me. Why? Well, I don't know. It's just because I've been watching markets every day for 8 hours a day for the last, 15, 20 years. And sometimes you just pick up on subconscious signals of seeing that before, been there, done that kind of thing. But if you're new, strive to make it a science to get started. There's no shame in just being, well, the signal told me to get out. That's the way that most of you should be doing it. Okay, that is it for today's trade school. Any questions before I shake and bake here? I'll hang around for a minute here or so, see if there's anybody that's live that has any questions. Otherwise, if you're watching this on a replay and if you have any questions or beefs or anything like that, let me know. Support at ReadySetCrypto.com. Okay, nothing seen. And I am Doc Severson, and it was my pleasure to host Trade School with you here today, the 17th of January. We will, just a quick note here is that Monday is going to be a holiday in the United States. We're not going to be putting a newsletter out on Monday. So we should be putting one out on Sunday, the weekend edition, as per normal, but nothing on Monday. We're going to chill out. I'm going to work on my book, and it's a day off in the rest of the large markets. All right, everybody, have a great day. Thanks for listening, and we'll see you soon.